Halts only. Hey, Ginger. Happy Sunday to you. Talk video. Oh, sound is a bit off. Yeah, microphone's way the fuck over here. There we go. That should be better. What's up, Red Ranger? Yeah, I had my microphone kind of pushed to the side. I was trying to do some editing poorly, but attempting. Okay, the sound's working just fine now. All right, I know it is. You explain what Dr. T tweeted saying share recall via dividend is a must. And you say not must. Is she misleading intentionally or naive, or does she know something you don't? If she says if they want to recall their shares, if they want to receive the dividend, they must. Which is correct. I've said before, in most scenarios, this is the most likely outcome is a share recall. GME is a unique case that presents significant lender risk, especially through ETFs. So it's not a must. They can, they don't have to. You have to read into the nuance of everything in finance. Nothing is as it is presented. Future possibility of betting on Musk Twitter deal failing. Didn't he like start backing out already? What's up, Northern Cowboy? Is tuning for the stream open to the poor same like being a poor? What's up, A user? Is there a rule related stock split that forces a recall? A reverse split? And in the event of a reverse split, they would lose all of their shares, not just the dividend on those shares. So lenders almost always recall in a reverse split. They can recall more slowly. You know, they have other options. You discussed trading options during rapid price change halts. That was tricky. It is. Generally, you would just simply wait for the trend to stabilize and exit. instead of trying to trade in the halts. But when trading in halts like that, you know, you want to make sure that you have a fairly wide bid ask. So, you know, let's go down here to like the 1 minute, and I'll dive a little deeper into this question. So, you know, we have the halts, but let's say we're not trading that. Well, all right, you know what? Fuck it. Let's just go straight to the halts. All right. So, you know, you're attempting to time this peak, which is, you know, unlikely. A very low percentage of traders who are in here are going to be able to time this exit, right? But what you do want is, you know, as we're halting on the way up, and we had multiple, you know, you do want to set a stop when the price halts, you know, at the current trading price, right? So you want your stop to trigger right away. Or, you know, if the constant upward pressure remains that's driving the halts, it'll just keep going up, right? You don't have to worry about it. But you set this at the trading price. This is your stop. And then you set your limit, you know, at the next either if you have your support resistances drawn on a, they're not drawn on a very tight scale on this because this is like my macro chart. But if you do have them on a tighter scale, you'll have your resistances, you know, at different levels, right? And you'll want to set it down one resistance level. So that way, you know, unlike a market order where you can fill in any range, right? You'll fill your stop or your limit in a range greater than whatever the trading price is after the stock is unhalted. So nice wide stop limit with your limit set far enough out that it'll fill, but also fill to the upside. And then you want to make sure when you set that wide range that you're not setting it below the price of your contract, right? So you want to still make sure that you're capturing profits. And so your cost basis on your contract will matter there, especially if it's a short trade. You know, if you've been in it for a while and you're deep in the money, it matters a little less. Musk violated an NDA, so they put the deal on hold. Okay. I wonder if it would have been assigned at 98. Probably. Institutions have been, well, exercising GME options lately. How's the DD coming along? A little bit. I'm still doing research on it. I'm gonna try to see. I'm recording the video for School of Stock today, but I'm gonna try to see if I can get the DD out also. It'll mean I'll probably be working pretty late into the night, but I might be able to get both done. How red are we going this week? Well, that depends. We without a doubt have, you know, a fair amount of GEX that will need to be covered in the coming days. T+2, right? We did have, you know, a large increase in price over Thursday and Friday. Even though, you know, we didn't cross 100, you know, our low was at 80, right? So it was still a very nice move to the upside, and that'll have to be hedged regardless. That hedging will, you know, its effect will depend largely on if the market goes up or continues to trend up, and the remaining FTDs. We still have ETF FTDs through the 19th, but remember, those returns are diminishing. CNS can capture volume from the previous day's move, And so, you know, you expect it won't be like FTDs, 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 right? It'll kind of be like FTDs, 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 like that, you know, as the previous day's volume helps them close the next day's volume. And that's sometimes, I suspect, why we start to see that volume pick up like T+2 before we start to run. So those shock waves of FTDs diminish as we move further into this FTD cycle. So honestly, from my expectations, after Monday, Tuesday, probably not a whole lot, right? The potential's there, but unlikely. Also, SLD is going to begin again on Wednesday, which is probably not going to have as much of an effect on the market as it did last quarter, but I still expect an effect. The saving grace there being the repositioning of large short positions on the S&P. I know what a stop limit is in concept, but I don't know how to actually do it on TDA. You need to look up, I don't use TDA walk-in, so you're going to need to look up their brokerage information. I'm sure they have like a video or something available to tell you how to set a stop limit. Just look up how to set a stop limit on TDA. And that should get you where you need to be. Thanks, buckle up, Jan. Volgavana White, thank you so much for becoming a Cornishon. 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 Do I need to use desktop? You should. There's a few reasons you should be using desktop to trade. One, your data is going to update a lot faster. Your options pricing, your stock pricing, all of that is going to be on a less significant delay. You have the ability to chart more accurately. You don't have to. I mean, I understand a lot of people work, but it is better to trade on a desktop platform. You're gonna execute your trades faster. But I know professional traders who just use their phone, and that is what it is. What's your outlook on the overall market? I think we'll probably cover that a little bit in a little bit, Austin. Can you explain how to use stop limit sells, trailing stop sells during a squeeze scenario? Which one is better? Stop limits. Stop limits are far better in a squeeze scenario because you'll have very violent spikes in price action, right? Usually leading to halts. But you also have violent downside, which will lead into, volatility on the following candles. So say, you're moving up and the price is peaking. And you're looking at your candles. Hold on, let me get this out of the way so you guys can see this better. So you're moving up and the price is peaking and you hit the peak, right? Of the current run. And say it halts here. The volatility on the next candle is going to be pretty extreme, right? To the up and downside. And the problem with this, with a trailing stop, is a trailing stop will follow the price action all the way up to here, but they don't move back down in relation to volatility, right? So as the price moves up, your trailing stop kind of follows the curve. Whereas, you know, say if you halt here and you set a stop limit or a stop down here at the previous resistance and a limit sell here, and then, you know, the price stabilizes after this, you know, high volatility unhalt. And then starts breaking out again. You haven't sold any shares, right? Your stop never got hit. And now you can continue to follow the price action to the upside while retaining 100% of your position. So trailing stops during high volatility are riskier. What they are great for is, you know, something you can't watch. Like, say, you know, you're trading a stock and the stock has moved above your price target and you're just following the trend, but you can't watch it, right? So this trend could continue for days, potentially, depending on the stock. So you would set, you know, a trailing stop when it crosses your price target, say like 5%, you know, and then just you can ignore it, right? Because if the stock continues up, your trailing stop will get dragged up with the rising stop or stock price, and then when it does revert, you know, you'll get stopped out. What's on the price floor if no stock split is announced at earnings? If earnings are not good, which I don't expect them to be from you know, a fundamental standpoint, like I don't think we'll hit expectations. I think our estimate is, although our estimate is pretty fucking low, maybe we beat. It's possible. You know, estimates at negative 1.45. We may not be. We might. We'll see. You know, a negative surprise still isn't like impressive. I don't think we're gonna have positive EPS. We'll see some volatility, but they'll likely try to drive the price down like they always do. We have Vega neutral pretty low in the 70s. I don't think they're going to push us much below that. Pushing us below that means they have to rebalance volatility swaps, which means lots and lots of call and put buying, which creates more volatility and drives price action. So they don't want to do that. It tends to be really, really violent in instances where we've hit, you know, Vega neutral in the past. Our bounce has been crazy. It happened in March. It happened just recently, this March and last March. So I think that's the low end of price action, but I have to note that they are hedged down to like 65.55. Definitely going deep on indicators last night. Oh Jesus. Yes, MFI is a little more accurate than RSI, but I find that it is slower moving due to the calculations required. So it's even more trailing. It's fine to use on a longer time scale, but intraday trading, I don't like it. You can't say option limits based on stock pricing. Options have charts too, man. You know that, right? And you can, actually, depending on your brokerage. Do you think it'll be lower highs each day as we move into the end of the FTD run? No. Maybe like next Wednesday, Thursday, where the FTDs are becoming insignificant. But I think with the gamma exposure we have, maybe our biggest run, will be Monday. I mean, it might not be like the 30% run we saw Thursday, but it should be decent. Probably better than Friday. Friday, it was important for them to hold the line at 108. Lots of, 0 DTE and 1 DTE calls were purchased. And so they wanted to protect, gamma neutral, which is at like, 107, 108 through those 2 trading days, and we got, rejected off of it twice hard. So they were definitely protecting the upside move there. With those calls closed now, and weekly calls being more expensive going into Monday, retail can't buy as much leverage. And so it's likely if we're going to see a bigger run, we'll see it Monday, Tuesday. If we're going to push up and really test that, 120 hedge of theirs, then that's when we'd probably see that price action play out. Yeah, Ryan. It's possible we'll see higher highs, but it does depend on the market hedging and FTDs. But the possibility of them is very good. What do you think of the likelihood we could hit 90 this week? It's possible. I don't know how hard they're going to drop. So IV is really high right now. I would imagine that if they're going to drop the price previous to the shareholders meeting, that we're going to see a slow, steady, low volume grind back down in price. I don't think it will be a rapid drop. It could be, but I mean, they could drop it rapidly, keep the IV high, and then just we'll trade flat for a while. But it's more likely that they try to just grind the price down slowly. Maybe the initial days of drops, like the first 2, will be a little more violent to the downside. And then after that, they want to bleed that IV off. And I think that's because positionally, they enter more hedges at the low IV point. So there's 2 low IV points in every cycle that are significantly low, like sub 90%, right? And they drive the price down into this low IV period. And the first one lasts about 2 days. And we just went through that. And then the price trends up, IV goes up. And then they grind the price back down again. Into our lowest low of the cycle. And there's another IV drop here that's even lower. This one will be like mid 80s. And this one lasts like an hour. It's very short lived. The amount of calls that get piled into in this super low IV point is crazy. So I think there's swap activity and hedging that goes on when they get this second low IV point. So if you're aiming for the lowest possible IV in the next dip, you may just want to aim for like lower delta value, right? Like just aim for low price because it's going to be almost impossible to perfectly nail that low IV window. And that's likely when they start selling off their in the money puts, those mark long puts. I think that's when they start selling them off and we see that drive the IV down. No problem, Rumple. I trade from a Frigidaire touchscreen. Just so everyone knows who's not used to the member chat. I'm usually way behind because I try to get to everyone's questions. Saw my driveway covered in confetti. That's why you gotta buy the biodegradable kind, so you don't have to worry about it. I still think it will drop lower than 80 after this FTD run. JFresh seems to have changed his mind on this. Just thinking about a good time to enter for June OPEX. 80 is an extremely cheap price on GameStop. If we fall to Vega neutral and we fall into the mid to low 70s, it will be not only a very brief window that we're at those prices, right? But additionally, it's not going to matter that much in the long run. Like if you miss that target window, if you're in at 81 and other people are in at like 77 and we go to 200, it doesn't fucking matter. Looking to increase my position pre-split. I feel like I just missed my window. What are your thoughts on purchasing shares and timing dips low IV pre-split versus waiting and buying post-split? Pre-split's better. How did you miss your window? We've got more lows coming up. You'll be able to. I don't think we're running for OPEX if that's what you're concerned with. I kind of just went over that, like just now. Thank you for the donation. I appreciate it. Maybe in the chat weigh in on how you feel that you've missed the window pre-split. You think 300K buy-in from Rentec is significant? I mean, they bought 600K back in August. I think they're just playing the cycles too. Popcorn Trader, Pop Cern Trader, welcome back to Dillionaire.
Happy birthday, Gert.
You have Vega neutral at 55?
Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you said, ain't Gert in the go back. When did you read the DD? Cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon, man. Praise be to RC and the BBY, please, cause I need GME to move soon, man. Got the band GG on the CNBC saying that he ain't seeing no.
That's a sharp move for Vega neutral. I'll check with Yelia too. But that sounds awfully quick.
But we ain't no cult.
Was there just a shitload of put buying on Friday? And is that Friday's OI or Thursdays? Just message me on the Discord. We'll figure it out. And it's fine. I'll have it updated in the morning either way, but I want to know what caused such a sudden move, or if you guys are just showing different data. No, shareholders will still receive the dividend. All right, just making sure I'm kind of caught up here. Ian slipping to 53. I haven't seen his post this morning. GNGN are at about 100. Okay. Why did Vega neutral slip so hard? It almost doesn't make sense. So I should sell the fuck out of my 95p. Well, depends on when it's dated till. If you can carry it a little longer. Next low IV period in 2 weeks, most likely. Probably, yeah. Tight lines. Thank you so much for becoming a Dillionaire, man. I appreciate it. I'll get you a song in a minute, but hit me up on the Discord and I'll get you out of the country club. Let me just try and catch up on chat real quick here. No, I'm not selling any cover calls. Not at the beginning of this week. Maybe towards the middle. Yeah, like Tuesday run, something like that. What GTE contracts are you talking about? In regards to what, Gibble Bits? Next low IV period in 2 weeks. Yeah. Is there a widget that tracks IV in a chart? Bar chart has historical IV 30. I think Fidelity does too. Anything below 170 used to be a good buy. That was true for a very long time. I'll chat here so people can know the details. My calculations use 1 day old OI. It's possible that it shot back up, but it looks like we had a VN near 55 before March too. Yeah, we did. It just generally doesn't shift that quickly. That's what I'm confused about, because Yalia was showing at 73 on Thursday, but I haven't spoken to her since. There's a gap there, but I feel like for it to move $20 to the downside would require a really significant amount of options repositioning. With the OPEX runs, how much of an IV spike do we usually see over where it is currently? Where it is currently is almost as high as where it was at the peak of March. Yeah, it's not bullish. It's I only started calculating it a few days ago. My VN trend is lower than Yalia. Okay. Maybe we can like average them or something. I'll see if she's willing to run big and neutral tonight. I know it requires like some computing power on her end, so it usually takes a little while, but I'll see if she's around and not busy. Calls going through a dividend split, act same like shares. Yeah. Calls going through any split act same like shares. Although a lot of that is at the discretion of the OCC, but yeah, they usually split too. Later, man. The Sanjeet song? I think that was just like someone trolling. Let's get through more important stuff right now, and then we'll fuck around with playing songs. Can you give me an idea on your expectations for BBBY through June? BBBY? I mean, I expect it to some degree to follow the same movement as GameStop. I know they have their shareholders meeting coming up as well, so that should be interesting. We'll see, what their forward guidance for the coming year is, and maybe get some insight into what's going on with the stock price and the BBBY buyout. But I expect it to, continue to follow OPEC cycles. So writing at the money-ish CCs for 3 weeks out. If we get a GEX bump Monday, Tuesday, then use money gain to buy puts around 70s 3 weeks out, assuming GME's gonna go to a new low later this month. Close CCs, puts, buy shares. Sure, except why would you buy $70 CCs when the target range is like the 70s? You'd probably want like $90 covered calls or 90 or puts rather. Like 90, 95. Especially on a bump. Like, why wouldn't you just get like $100 puts? If we're gonna move down $30 from that price, seems like you'd want to have a put there, not super fucking far out of the money. Will you stream the Bobby meeting? Probably, yeah. Back to the low IV period. What GT are you looking at regarding 70 to 80% IV30? I mean, I don't think anybody's gonna nail it. It's so fucking unbelievably short and volatile. It's gonna be very, very hard to nail, but it tends to happen like a day or two before the run. So farthest dated call that, or closest dated call that captures, the T+2 action. June OPEX begins on the 17th. 17th T+2. And then after that, it can continue depending on how violent the T+2 period is. But challenge accepted. Yeah, puts way closer to the money. Otherwise, you've got like this really tiny, narrow window that you've got to try to get out in for them to be profitable. It's kind of shitty. Or you're just playing extrinsic value in them, which may not be that great because we know that they want to drop IV, right? So you're buying puts in a high IV environment, and you're going to be selling them in a low one. So you're better off trying to capture like actual intrinsic value in those contracts. I think another $60 run from the bottom for June OPEX. I don't know. I don't know how hard we're gonna run. Well, I mean, we'll assess gamma maximum and everything going into that week, and there's a lot of things that can change between now and then, like a stock split. What's the date for T+2? It's just T+2 from the 17th. It's the following Monday, Tuesday, Wednesday. 20, 21, 22. Do people not own fucking calendars? To maximize gains, is it better to have more calls further from the money versus having few calls closer to the money? Yes. Say recalls do start happening. How long would it take until we start seeing price improvement? We would probably see the effect of it like 2 trading days before the ex-dividend date. We can see the effect immediately. It just depends. I still use a sundial. What's the date for the BBBY meeting? Wonder if it's listed on here. I think estimated date is July 13th. Which should be after OPEX, so we'll see. $6.28. Everyone's got a different answer, huh? I don't know if it's officially announced yet. OPEX date is the 20th. Then to capture the real action of T+2, we need to get options for the 27th. Is that right? Or June? It's the 20th of June. Nostradamus. Well, it begins the 20th of June. But you need options that capture June 20th, 21st, and 22nd. So the latest dated or the earliest dated options that could potentially capture that are for the 24th, except they can miss out on a lot of upside and their liquidity is going to be shit. So really, you need to look at July or August. I'm wide awake. Bat bones. Until we wake up. I slept a little bit this weekend, I think. I slept for 5 hours last night, Bat Bones. All right. I've never felt more vivacious. I return to work tomorrow, daytime construction. I've learned so much the last months. The daily wrap-up videos are a great addition for those that can't watch all day. Thanks, Skirk. No problem, man. Happy to help. Shadow ban check? You're good, Steely. Do you know, eventually one day, Supersonic will leave us the fuck alone and stop hate watching the stream and reporting everybody in chat. Do you know when they will open up the August calls? Should be after May. They're monthlies, so approaching the May expiration, so sometime this week or right after next week. Yeah. I mean, don't just look at IV though. I saw a lot of people in leading up into the March run hunting for that low IV. And they missed out because the window to buy low IV calls was so fucking short. Pay attention to the price too. Buying $90 calls when we're trading at like $75 is a fucking great deal, regardless of the implied volatility. Especially, if our target range is like 140 or 150. You're a good username. So are you, Lawrence. If we're not up Tuesday and you sell CC on GME, what expiry are you considering? Probably the 27th. I don't want to hold covered calls through the shareholders meeting. We don't know what the fuck's going to get announced. It could be crazy. I totally messed up hunting low IV, and it turns out it didn't really even matter. Yeah, I think people get too caught up with like hunting for that perfect IV sweet spot. And while it's great, especially for entering far out of the money calls, um, ultimately it doesn't fucking matter. What do you want to hold a call if it does get crazy? Sure. Still not buying any yet. Would you go into how you're able to 7x your BBBY options when the price hits 35? Okay. What do you want me to what do you want me to go into? And if the price goes up that much and you have like 15, 20, $25 calls, you're going to make a shitload of money. Do you think Luna crash and other tether crashes equal short hedge funds or MMs crashing up for MOASS? No regulation on cryptos and tethers are a bridge to fiat equities infrastructure affected in crypto price. No. GME is no longer profitable for big time volatility players. What will them exiting look like? Will we notice? They probably exit on the down cycle and probably not. What makes us think that we won't do the same thing that they did last time and roll obligations forward again? Wouldn't that make August calls the play? I said July, August, but they can't roll past walk-in. They can't roll, as far as we know, they can't roll past the index rebalance that occurs on quad witching. We kind of discussed this a little bit over the course of the week, but you know, with our previous cycle being on F man, right? With us running on these expirations and not, you know, on the March, June, August, October, right? Or no, it's MJSD. It's likely for most of last year that they could have covered on this cycle or on MJSD. They could have done this all along, right? They just didn't. Or alternatively, the obligations that caused us to run on the F man cycle no longer exist, and we now run on MJSD. And this could have been carryover from the Russell 1000 switch, when we moved from the Russell 1, moved into the Russell 1K from the Russell 2K. And it's possible that August and November's price action were the carryover of obligations from the previous ETFs, and that now we're, you know, experiencing obligations being cleared in Russell 1000 ETFs. But as far as we understand it, they cannot carry that roll forward through the net asset rebalance of ETFs, which occurs on quad witching, and quad witching occurs on, you know, MJSD. Quad witching is June 17th. You have triple witching and quad witching. So the OPEX coming up on the 20th is triple witching. And quad witching occurs on the 17th. there's a lot of reasons that we may have run on the other cycle previous to now and now run on this cycle. Don't forget that, on Feb 24th, when we expected OPEC's covering due to the previous timeline, they changed the rules on how volatility swaps are hedged, and they changed them in a way where it's not transparent to the public how those rules were changed, right? Simply that their hedging requirements were reduced. So it's very possible that, we're seeing the rebalance of those hedges quarterly. And by them changing the rules, we're now able to be rebalanced in a different quarterly cycle. Or simply that they were allowed deferrals because of the rule change. There's no transparency there, though, so pinning it down is difficult. All we can do is watch and look for additional points of confirmation. If we see an OPEX run after the end of this week, moving, into the week of the 27th of May, that's going to create, that's going to mean that we're still on the old cycle and that March was just an aberration. So I'm trying to ask a question, but I must be saying bad words. Yep. So any account I can trade options and has excess shares. Look at selling the peak of the next quadrant to rebuy at a low. Should we consider the split dividend while I wait for the dip? I mean, you'll know the timing of the split dividend, right? Steely Dan. Because it'll be announced like the X dividend date, which will be the date that you need to own shares by in order to be considered, eligible to receive the split. There's nothing that shows current IV live. And there's no paid indicators that track it accurately either, unless you're getting institutional like CBOE live data, which even I don't want to pay for. How long do they usually take to cover GEX? I mean, it depends. They can cover it all at once. They can cover it over 2 days. If they cover it all, the advantage to covering it all at once, right? Like we open here, they cover all the GEX at once and then drop the price to here by the end of the day, is that, they're not carrying forward another positive delta hedge. If, we run up, dip, run up, and then run up into close, then, now they have an additional day of GEX to cover and carry forward. And this is what happens during OPEX. And this is why our OPEX runs tend to extend out past T+2. Even though the majority of the volume and everything occurs in the first 3 days, the pressure from that volume creates a further run, as does options demand as gamma max is raised, right? Yeah, a good way to tell if your question is like if YouTube's blocking your question is if you type it in and you don't see your own question in chat, it got blocked. Just an FYI for people. I hopped on late today. Did you talk about what to expect for potential price action for this coming week already? Yes, extensively. Quad witching's on the 17th. The vote's already out. There is no vote. It's done. right? Everyone's gotten their fucking paperwork, right? Everyone's voted. I think GameStop would be hard pressed to push forward a forward split with the fucking price trading 100% lower than it was when they announced the fucking split. They may still split anyway, but it's not a great look. The press is gonna have a field day with it. Dilemma I have right now. Bobby's so cheap, I can get 3 to 5 more leaps in August than I could GME. Yeah, GME is gonna move 3 to 5 times harder than BBBY will. They're not gonna move to the same degree during OPEX. Runs on GME are gonna be significantly stronger. GME is far less liquid. So if I had the choice between the two to buy calls for OPEX, I would buy them on GameStop. BBBY is more of a buy and hold with some OPEX opportunity windows. But it does not have the same illiquidity or volatility that GameStop has. Not by a long shot. Thanks, Justin, to win it. Just in it to win it. How long do you personally think the GME CC game will last? Would a stock split shorten the duration of the CC game? Uh, I mean, you'll have more shares, so you'll be able to sell more leverage. Not necessarily. You can sell CCs on stocks for years, forever, if you want to. How long will they remain valuable? Only time will tell, but currently they are, so. Return of Handman, same like Return of Frag, but smaller ups. Sure. Do you vote yes, all, or no to the compensation? I voted yes to all, but I didn't like the compensation. Could their strategy be to do a split at the peak of the OPEX run? I would like to see them split the stock before OPEX obligations are due. The more risk they can pack into that window, the better. Does AMD keep running? Oh well, I hope so, right? There's no way to tell, but yeah, if the market continues up, AMD likely will too. Their earnings were phenomenal. No problem, Harry Balls. With regards to stock split benefits eligibility, is it possible that GME says a date that has already passed? I won't be time to buy more shares in time to benefit for the split. For the ex dividend date, it's not set by GameStop. The ex dividend date and the date that the trade become active are set by the exchange, and they'll be set in the future, not post dated. June OPEX before the split could be a good cover. Retail FOMO for GME split. Yeah, exactly. Yeah, I voted yes all and then looked back to the compensation part after and was going, yeah, I mean, I had a feel like the compensation part was going to pass either way, but I don't like it. Call same like shares for XDiv, or do you need to act? The calls split separately. It's done through the OCC. If you want the shares before the ex-div date, sure. But in a stock split dividend, the options just split when the stock does. So, options contracts will just be worth more of the underlying. So they're worth 100 shares now. And if we split, like 5-1, then they're worth 500 shares. And then the stock, the price of the contract will split 5-1 as well. So if it's like $100 call, it'll split down to 20. The dividend shares are issued by the DTCC, not by the lenders. The DTCC already has systems in place for issuing those shares. Remember, just because they've overlent doesn't mean they've lent your shares. Do you understand that? All shares are the same. No shares are individualized. There is no serialization. There are shares. So a share borrowed is a share owned, is a share lent. They're all the same. Stefan. No, I haven't gone over the SPY yet. But I think we're going to do that now. Yeah, we're about an hour in. I think that's a sufficient amount of GameStop talk. What if the DTC somehow, for whatever reason, doesn't issue the dividend? Well, that would be very odd. Wombo combo. I would imagine then no one would receive it, right? I mean, I really don't know how to answer that. You're good, Iron Archer. I buy 100K worth of GME and prove it. Will you mod me? No. Also, dry powder, dry powder, dry powder. Congratulations. Later, Matthew. I've had a pretty okay weekend so far. Christine Lagarde's MOASS got. Then you just skip my messages today? I just answered the question you just asked. You said, could you shortly explain what's in the compensation? Oh, okay. Maybe I didn't. Maybe I just read Stefan's and got angry. Could you shortly explain what's in the compensation part and what don't you like about it? I don't think they deserve to receive additional compensation, Iron Archer. We've gotten zero forward guidance and, no information on what they're doing with the money. I mean, it's great. I believe they are doing things with the money. I understand Ryan Cohen's position and, keeping his mouth shut. But at the same time, like, I'm not going to pay them more to do that, right? Like, I'm invested in the stock for growth potential, and I want to know something about that growth potential, right? They took billions of dollars out of my share value, or our share value, or shareholders value. And I want to see the investment. Like, what did we buy, right? Before anybody gets paid extra or their compensation packages go up for work that we don't know about. And I believe they did the work. I want to see some information about that. So that's kind of why I have a problem with the increase in compensation. If this was any other company, this would be unacceptable. That's just a fact. GameStop is in a unique position, and I understand their need for secrecy, and I'm willing to accept that for now. But it's getting to the point where it's about time for us to start hearing some things. You know, we're as of this shareholders meeting, we're now a year into Cohen's position on the board. We're a year into Furlong's tenure as CEO. You know, it's tell us something. You don't have to give us a lot. You know, we like the stock, but give us something. Let us know what you're doing with the money. Let us know what the plans are. I don't believe we'll ever hit past 200 after what we saw last time. It's clear they won't allow that after what happened on the last run. I feel like I've seen it all by now. They'll just change more rules like they do every time. Please change my mind. No, that's a good mindset to have. You should be skeptical. Skeptical will make you more money than hopeful. Hopeful will lose you money. Historically, very true. Asked this Friday, but got ignored like a pleb. Anyway, what events, dates should I look out for over the next 60 days? Just a quick summary. I can figure out the exact dates. I mean, we're looking for we have the shareholders meeting coming up. That's relevant. We have May and June OPEX. Although we don't expect anything from May OPEX, they can surprise us, so be prepared for that. You know, if their goal is to manipulate the stock in a way that retail doesn't capture as much profits as possible, you know, they are going to attempt to manipulate the timeline within the constraints that we are aware of. So May, June OPEX, we have shareholders meeting on June 2nd. We're looking for a declaration of the split, ex-dividend date for the split, and an active date for that split. So the date that the exchange sets for that split to be realized, which will change the price and the float of stock available on the exchange. Those are the big ones. You know, supposedly we're going to see the NFT marketplace before the end of the quarter. That would be a big announcement. There's a lot coming up. You know, at some point this week, if we start to drop, I'm probably going to be looking at getting into some leap positions just to protect my upside through a lot of these unknowns, right? Because I do want to have some exposure. I do have a lot of shares though, so I don't need a significant amount. If you have less shares, you may want to consider having a little more exposure to any potential runs that could occur due to news. Would you consider putting out a portion of Pickle's picks on Saturday so you can ask questions about them on the members only Sunday streams? I've thought about that in the past, but the members only Sunday streams are not open to just Dillionaires. So no. You can ask me questions about them on the Discord. If the price is too low during the shareholders meeting, GME most likely won't split. Is this a way a short hedge fund will dodge a split? Yeah, that could be a way that they dodge a split. Although if the purpose is to get the shorts off the stock, I don't think that would be an effective way of dodging the split. Sorry if you answered already. Not to mention that would just compound obligations, right? If they drop the price, there's no liquidity in the stock, so dropping the price requires synthetic shares, and those have, you know, a rebound effect. So the price will rise as much as they drop it. Sorry if you answered already. Is there a potential for BBY to run during OPEX? Yeah. That's when its potential to run is. PT for Bobby on Quadwitch. Same like GameStop. We don't know. Later, Lucky Luciano. Didn't GameStop announce a Q&A at the meeting already? Doesn't that more or less mean that we'll get a little guidance? It depends on what questions they take and what answers we get, but possibly, yes, it will give us some guidance. I'm looking forward to it. I don't think a Q&A at a shareholders meeting is sufficient guidance to increase executive pay. But I do understand, that we are in an inflationary economy and, wages need to go up. What are your thoughts on the market for this coming week? I'm going to go over that right now in a second, Ryan. I mean, options positions on SPY and SPX do have a huge effect on the price of because the interest amounts are so large. It does have an effect, but they are also way more liquid, and SPY is an ETF, so infinitely liquid, right? So it's not like you're going to see huge amounts of volatility there due to those positional moves. We do have more volatility naturally as we enter a bear market. Bear markets are more volatile. So, even though we do see, repositioning there and we do see the effects from that, you're right. It's not to the same degree that we see them on GameStop. GameStop's price is heavily influenced by its options, which should not be the case, but it is due to the amount of illiquidity in the underlying. And the large amount, and you look at other extremely illiquid stocks like DDS or CAR, EPAM is a good example. And the options chain is highly illiquid and the stock is highly illiquid, right? GameStop is unique in the fact that its options chain is highly liquid and the stock is highly illiquid. If no squeeze happens pre-split or post, does that mean squeeze is no longer a play for GME? Yeah, sort of. Liquidity has to remain really low. I mean, we'll know if the cycles continue, then the potentiality for a squeeze or the potential for a squeeze is still present. So no one sells essentially, but there's a psychological effect to owning more shares that generally releases liquidity. So stocks tend to be more liquid post split. I'm hesitant to reinvest in other positions. Yeah, and Lawrence, your response is correct too. When you first start out trading, don't keep your gains in your account. Don't reinvest or trade your profits. Take your profits, move them somewhere else. You have a $25,000 trading account. That's what you use. If you need to fund it because of losses, fine, but it stays at $25,000 till you learn how to manage a larger account, and then you increase the size of the account and you manage that larger account. But you don't just take your profits and trade them. You don't go from 25,000 to 50 because you're not prepared for it and you'll just lose money. Can we see a reverse spot once? Spy seem like ETF actually working as intended. Yeah. When you say GME leaps, do you mean 23? Yeah, I don't really have any intention to buy anything further out than that. Like I'm not going to buy 2024 leaps. Not unless the fucking IV drops drastically. Let's talk about true MOASS coming on wheat. We will. I'm not gonna lie to you, Nugsy. I don't give a shit about hammer candles. You're right though. It's trading up on that much volume is likely beneficial to the SPY going into next week. I think so. I think the market, and we'll go into that now, but I think the market's going to continue to trend up um, into at least the early part of this week. Friday's bounce looks very good. It's right on the trend line. Um, if we can clear 400 by Monday, I think maybe we're heading for a retest of 420. There's enough short positions on the SPX and the SPY to see us move pretty strongly back up to the upside as those are repositioned. Funds should be very liquid, so SLD's impact should be minimal. That doesn't mean it will, right? Because we don't really know for sure, but they should be. They've been selling out of fucking everything. So I don't think liquidity is an issue for most funds right now, and so SLD should have less of an effect this month than maybe like last month, where it had quite a large effect. You sure how best to predict peaks during runs so you can time the exit of options positions. Well, check the daily DD for gamma maximum. And whatever gamma max is sitting, be ready to exit on any price point above that. The peaks of runs are generally stagnant price action at a resistance with increasing volume. So volume is going up while the stock trades relatively sideways or flat. That usually indicates a drop. Yeah, I know. I turned my camera off for a second. That's dumb. You use profits for YOLOs. No. No wheat leaving Odessa. Yeah, India cutting off grain exports too. Wheat tracks futures. Yes, should pop. I'm aware. It's going to drive the price up. Although I believe India expects or exports larger amounts of hard wheat. So it may have a greater effect on JJG than it does on wheat. But with the summer wheat season coming up, it's possible we see it on both. That lower protein wheat still very high demand, and actually has fewer climate conditions in which it can be grown. Gamma Max is super helpful. Looking back on charts, I noticed that most bear markets. I mean, we had the information to time the peak before the peak on the last run, like a day in advance. Everyone was well aware that we were peaking. It was updated in the dailies. The bearishness was noted over both days. Even the day they announced the split and we ran more. Um, you know, we knew when we were gonna start going down. I think basically the entire run up last time we tracked almost perfectly. Even the downside, highs for weeks, we were right on top of that. So I think we'll continue to be, as long as GameStop remains heavily influenced by its options chain. I think we'll have a big advantage in tracking it. Most bear markets ended when the SPY printed a double bottom. Sure. Yeah. That's because usually there's a relief rally before the end of the crash. Ark, thank you so much for becoming a Dillionaire, dude. I appreciate it. Hit me up on the Discord. I'll get you added.
Happy birthday, Kirk. Yeah. Yeah, we might have a chance, but we ain't got rope. Give us more than a chance, cause we ain't no coke. Get the cash in advance,
Is that a true indicator coming along? A couple of those picks you had from weeks ago had huge jumps around what seems to be FTDs or maybe a roll period. A lot of the jumps you're seeing in the stocks I've been picking are due to sector shift and money flowing back into the market. So remember, short hedge funds, not short hedge funds, but hedge funds, and large market participants had all their money in growth and tech, trading at forward P&Es of ridiculous multiples, and they've been pulling all that money back. And now when they reposition as the market declines, largely due to their pullback, they're going to reposition into value. Consistent profits, long-lasting companies, nothing speculative, nothing new. They're going to try to stay away from those things. They're going to seek out value, and they're going to seek out growth very cheap. Right? They want to buy the bottom. This is what big institutions spend years waiting for, is buying the bottom. Because when they buy the bottom and then the market goes up, their total assets under management increase exponentially. This is where they're going to put forward all that capital they've been earning this whole time. And so I've been picking a lot of value stocks. So we expect to see money flow into commodities. We expected to see it flow into valuable stocks like Cat, Home Depot, things with proven track records, proven profits, year over year, regardless of economic conditions. You got one more month before my puts expire and I return to Corn Trader. Netflix looks pretty good coming into this week. So if Google bought into GitLab on Friday and filed same day, bullish as fuck. Could be. That's the other thing you guys are going to see a lot of, is you're going to see a lot of these big, super cash heavy corporations making acquisitions while other companies are trading very cheaply, right? And we're already starting to see that, but we'll see more of it. That's the reason all the big tech companies are splitting, because they can get that influx of capital when the price drops, right? Because their stock will be cheap and desirable. GME is splitting also. Should tell you something about where they think of themselves in the future. Full port AMC. JGG doesn't seem like a great options play. It's not, unfortunately. You can buy wheat futures. It's a little tricky, but you can get exposure to the grain future sub index. And trade the commodities directly. But you'll need a brokerage that supports that. And also you'll need a brokerage. You'll need to have enough money to play those contracts. They're not cheap. I'd say most of you don't have a very good understanding of The futures market, I would say it's pretty risky. You should probably stay away from it until you learn more about it. GME requires Bye Bye Baby. Will they name it Baby Stop or Bye Bye Baby? I have no idea. So yeah, I think the SPY looks good. We see large amounts of puts being shed into the end of last week. I think the current trend is going to at least continue through Wednesday when SLD begins. I'd be a little more tentative about entering SPY positions then, but you know, a long call position for the next couple of days on the SPX or the SPY are probably something I'll be playing myself. Well, I should say additional long positions. I have some already. Yeah, institutions do. So if there's like a reverse split or something like that, institutions will sell so they don't own too much. Um, well, they just sell anyway because they lose confidence in the company. But yeah, if the price of the stock rises and positionally they own too much due to ETFs or something, they'll sell some off. And there's a constant balance that occurs. Thanks, Nautical. You would know all about spyglasses. Also, weird question about a firm. Singapore government heavily investing at 30, which is above the current price, and continue to buy more and file each time. What mean? A firm at 24. And it means they have confidence in it. And so, yeah, I'll address a firm because it was. I have two charts for AMD here. Here's what I don't like about a firm. I think right now people are leaning more heavily on debt and credit, and we're gonna see people who still currently have high purchasing power leaning on this to offset the near term or upfront costs of items. I think as the economy continues to decline, especially if the labor market starts to dry up, we're going to see lots of defaults on this credit that they're making money on now, and that's one of the reasons we see the stock price dropping so hard, is that's priced in a bit. I do think it has some potential to move back up, especially in the earlier parts of the crash. But long term, I think it will not be good for them. We'll end up with a lot of toxic debt that'll be hard to shed. And people will write it off in bankruptcies and they'll never get paid. Did I hear that right? That SLD is starting Wednesday, i.e., SPY could start seeing a decline starting Wednesday. Yes, you did. Post split price target on Google end of year. I don't fucking know, man. It's already cheap. I mean, Google's what's Google trading at on Friday? 23. Yeah, I mean, it's already pretty fucking cheap, honestly. And I wouldn't be surprised in the slightest if it runs pre-split also, which is coming up really soon. I expect they'll continue to grow. And if you want to look at it from a value standpoint, they have an uncrossable moat and a monopoly, an effective monopoly. So unless, the FTC comes in and fucks with that, they're going to continue to see fantastic growth and be worth a lot of money. No problem, Elliot. Are we MOASS yet? Yeah, so near term bullish for a firm. I'd wait for a bottom, be patient with your entry, but I would say near term bullish. Long term, not so much. Yeah, same with Upstart. Except Upstart's different. It's got competition, free to use competition. Um, actually, I don't like Upstart very much. firm and afterpay is the devil. Yeah, I agree. Same like payday loans. People buying shit they can't afford will find out that it turns out they couldn't afford it. And that will bite people in the ass, and no one's going to pay back a firm, right? Like, I know there's a lot of people out there that are like, oh, I care about my credit, I keep it up. But there's a lot of people who, you know, their credit worthiness is not that important to them. I would say it's the majority of people. And they just won't pay their bills. They don't give a shit. And there's no punishment for that. Madison Wilkes, thank you so much. Especially if it's the choice between, you know, survival and those bills. They will choose to not pay. Not like, you know, if it's do I eat this week or do I pay back a firm for, you know, my fucking jade roller? Guess what is gonna get paid for? Anything else? We got some more stocks that people want to talk about or questions. Covered the market. I've covered GME. Those are the things I really wanted to look into today. And Shade Roller is 100%. Dwall? Target looks great. I like the current price. I think the earnings are going to be good. I'm already in it long. I bought in like last week. Target's great for a lot of reasons. One, they sell groceries. Two, they sell household essentials. So they'll always have business, regardless of the state of the economy. Three, they pass on inflation to their customers. They have a great distribution network, and they're probably more well supplied than most of their competition as far as inventory goes. Well-run company, solid profits. I think earnings are going to continue to beat, especially as, you know, inflation rises and the economic crisis gets worse. B of A, until B of A sues you over 10K of debt that you can afford to pay. And most of the time, that just goes off to like a collection agency who buys the debt. It's much cheaper for them to sell the debt than it is for them to sue you. I know dudes that have lost like $400,000, $500,000 in margin accounts and then just waited 7 years till they traded again. Or till they traded on margin again. Filed bankruptcy and fucking. It stays relatively the same, gibbles and bits. I would say I have about 60% of my account for trade, like in long-term investments, 30% of my account for trading, managed trading accounts, and then 10% for just fucking around with. There's more complex portfolio management that I could probably employ. 60% of that long-term investment, there's a chunk of that that's set aside for hedging. Rolling hedges, but those have been profitable, right? Because the market's so fucking volatile lately. So nothing like protecting your money and then making more money. What are your thoughts on AMD this week? It'll continue up if the market does. Their earnings are really good. Thoughts on Intel? It's like a long play. It's cheap right now. I think it'll rally for, you know, the government subsidy of their manufacturing processes But I think it'll take a long time for those to realize any profits. And, after the near term rally, investors are going to get dissuaded and it'll come back down again until profits and stuff are realized. I've never made a venison burger. I couldn't tell you. I'd imagine you have to cook them a little better because of it being game meat, and you probably can't make a medium or medium rare venison burger. Also, when you grind meat, it can push bacteria into the mince. Whereas if you have a steak, the bacteria kind of can't penetrate the muscle. But I'd imagine like salt and pepper, like the standard seasonings for a burger. CCJ looks good, but I'm not in a rush to buy into uranium. Do you think news of Putin dying will affect the market? Sorry if you mentioned it just during the stream. Putin died? When? Thoughts on mint juleps? They're alright. You know what? I liked them a lot more. I was living in Georgia for about 4 months at one point. And I'm going to say that I liked them a lot more when it was like fucking 100 degrees with 100% humidity than I do in drier or cooler places. Something about that heat that lets you ignore the sweetness. Sweet tea, too. It's just fucking undrinkable under any other conditions. Where's a good lunch spot for celebration in New York City? Just not per se. I don't know. What's the budget? God, there's so many restaurants. What kind of food? What kind of budget? There's a news article about him having cancer. Yeah, whatever. If he died, what would happen? Volatility in a power vacuum. No one knows. That's what happens when, fascist leaders fall. It's usually not a good thing. What comes after could be worse. No, Putin didn't die. It's fake news. Any reading suggestions for understanding if a company is well run, or just your overall impression of the management past actions? I think there's value in evaluating a company. There's also a lot of value in knowing everything you can feasibly know about that company. You can evaluate GameStop, for instance, right? And you're going to get a valuation. You're going to plug it into an evaluation model. It'll give you a price. Whether you choose PEG or profits over and free cash flow, like PFCF. And that'll give you an idea of the stock and if it's worth looking at and stuff. But the real value is in understanding that company, knowing how it's positioned against its competition, knowing what it plans to do in the future, understanding the leadership, understanding how they operate. The deeper you dig, the more value you can find. Any thoughts on Fubo, junk or slump? I used to be invested in them. Like I was long. I sold on the last like run up when it started to fail, but it looked like it had good potential. I don't know anymore. They've made some really terrible decisions, and a lot of their plans didn't come to fruition, which was being priced into their stock heavily. What's on the other screen that we don't see that you use for day trading? Usually my other brokerages, OBS, the chat, and Discord. Apple's outlook for the next week. It's been being beaten down. Fuck, that's rough. Well, it's fallen through all of its trend supports. It looks like it bounced here on 138, which is previous support from last year. It's also previous resistance from September and December of 2020. These will extend out. I haven't updated this in a little while. I've just been selling covered calls on Apple. I would say if it can cross this trend here at 145, maybe I really feel like that's overly bullish, but maybe a move back to 154 with in line with a market rally. Dude, where haven't you lived? Not many places. I had two separate jobs that both required just insane amounts of travel. What about CPS? FWFB had a good DD a few weeks back. Currently at 549. Forecasted price next year, 26, 27. Once new car production picks back up, semiconductor shortage improves. What the fuck is CPS? Copper? Yeah, copper's at a good price. I like copper. I have copper, but just in ETFs. Yeah, I think we'll see a demand on copper. It's just another commodity, and the price will drive up on it as well. DFE seemed like he was good at digging. He was. I agree. No more than $80 a person. What kind of cuisine? And that's not even. I mean, at those prices, you can eat somewhere pretty nice. Tim dodged questions 4 or 5 times about demand on the iPhone last earnings. I mean, there's still demand. Let me tell you, they may be down, but that's just because people aren't getting new phones right now. Remember, everyone's cutting back subscriptions, right? That's where we're gonna see. Think of anything that's subscriber based revenue, and think that remember that with inflation, with higher costs for goods, groceries, rent, things like that, people are going to be pulling back on this. So things like Netflix, Verizon, Sprint, cell phone manufacturers, because people aren't going to they're going to keep their old phone and not pay an extra monthly fee to get a new one. They might save up and buy one, but that'll reduce demand in the near term. Kind of like we were talking about with the firm, right? Like people they're not going to want to carry those monthly payments. Short Pi-Fi Discord then? It's not publicly traded. Also, so far this year, it has negative beta. Moonman's gonna paper hand his sub again. I mean, that's just inevitable. You spelled shill wrong. Have you lived in Philadelphia or you just hate it? I've never spent more than like a week there. No problem, Dildan. Actually, I think over the last couple of weeks, viewership's back up. After the March run, viewership went down, and then it was pretty stagnant for a while, and now it's going like back up again. Viewership just moves with GME cycles. Are you gonna moonhand those cover calls? Nice, Greg. Thoughts about Shell as an oil company? I mean, they're super evil, but they'll probably make money. They're like one of my least favorite ones. They have so many like lawsuit debts that they have to pay off. It fucks up their earnings. I prefer like Zom or Oxy. BP is an interesting play because they're moving more towards green energy. They got fucked a little bit by the Russia situation, but I think they'll recover. They have a lot of cash on hand because of it as well. Yeah, I think a lot of people will be budgeting more. Would you rather keep living in New York, but you have to get a weekly kick to the nuts from a 6-year-old, or live in Philadelphia? I'll take the weekly kick in the nuts. Same thing, right? Either way. We're going to be looking up soon from India not exporting. I know. I've been bullish on wheat the whole time. I didn't think I was early. I think I was just right on time with wheat. I took some bad hits off SST and needed to check out for a bit is all. I'm one of the numbers that occasionally takes off for a couple days. You're all good, Morty. I know what happened, dude. I read about it. I'm sorry, dude. Stop YOLOing into shitty 0DT positions and just grow your capital slowly. It's so much easier and less stressful. Sure, you might not be rich tomorrow, but you might be wealthy someday. Do we profit from rising viewership? I don't know. I think Oxy's a good buy after its push. Yeah, if you're not in it, maybe wait. I wouldn't chase Oxy. There's other opportunities. You might as well just buy like crude at that point, right? Like heavy, like probably not light crude, but B. Ah, fuck is the ticker? I can't remember. I'll have to look it up. Have you looked at USDT? I really don't care about crypto at all. I mean, the entire market capitalization's pretty insignificant. trillions in crypto, you know, compared to quadrillions in like equity options. And commodity derivatives. And as far as DeFi goes, I mean, I've never been like bullish on the future of it. Berkshire bought into Oxy this week. You basically front ran them. They've been buying Oxy for a while now. I'm pretty sure Warren was in before I was. Yeah, they're spending money like crazy. You know, even there's the sentiment that we're going to crash further, but we've already lost more market value than 2008 and like 2020 combined. So, you know, if the goal is to deflate the bubble, I'd say it's getting pretty deflated at this point. Maybe fucking JPow's actually a genius. I don't want to think that the Fed could ever do anything correctly, but even inflation numbers came in a little down. I mean, that's an impressive fucking turnaround. It's hard to say if we're at a bottom or not, but yeah, I saw that. Yeah, I saw the tweet and then I checked it, but yeah, it's. So you're saying we hit bottom? We might have. I mean, it's something we have to consider, right? As investors, especially if we're bullish on things, you have to at least account for some of that. I think there's still value to be lost, but I think maybe it'll slow down. So like maybe we continue down, but slower. Not such violent drop-offs. What time is it? Oh shit. This is the soft landing. It's actually kind of soft. And if his goal is to crash the market without fucking creating a flash crash and spiking the VIX, it's been successful. Over short volatility positions must present a huge amount of risk on that side. Raw value, definitely not percentage, but value. Remember, you know, the M1 money supply dramatically increased from 2020 on, right? And a lot of that went into the market. Yeah, it hasn't dropped as much as percentage wise, but value has fallen out. Value far in excess of the previous two crashes. Impressive turnaround at whose expense though? I mean, everyone's. It's a shared burden, shared more heavily by those who can least afford to share it, but I mean, mostly we watch XRT. It's the easiest one to watch. It has a very liquid options chain. It's indicative of their other positioning. So reverse psychology. This is the bottom, and SPY new all-time high if new CPI numbers is even lower. I don't think new all-time high, but up. I had the same value as last year, but still down 50% because I didn't take profits. Imaginary gains. Yeah. I mean, at this point, all of the growth over the last year, which was insane, is basically gone. But stocks only go up, right? Someone told me that. I forget who it was. As long as you ignore the part where they go down first. Tavern on the Green. They have good food. I mean, they're a bit dated, old, but they have good food. Fancy. It's nice. I've been there. "2021 will be remembered as the year of the diamond hands." Maybe if people weren't so diamond handed, we would have crashed harder. The general public has learned enough about the market that they've learned to hold. After, 50 years of Warren Buffett saying the same exact thing, maybe people are finally starting to catch on. What do you think the upside this week is? Like 118, maybe. Even that's a bit of a stretch. Yeah, remember they sold in the money puts. When we were trading at 80. Right? So those only go up in value. Like well, the returns on those are increased as the price goes up, whether it be 108 or 120, 140. It doesn't matter. If the price goes up from 80, they make more money because they're already in the money. So as the premium drops, they become cheaper to buy back. The bought puts are more indicative of a range. Are you bearish on ODFL? I really think you should reevaluate that stock's strength over the last year. It's been strong. I don't feel like I've even looked at it. Oh, Old Dominion. Here's my problem with trucking. In the near term, I don't see trucking experiencing a lot of growth. I understand the expectations, and like, sure, it can see a little bump, but there is going to be a turnaround on that. We are at some point going to hit a period of oversupply. And so, while supply is still flowing out, they'll do okay. I mean, I think they can recover from this point, definitely. But my point is that moving forward into the next year, it's going to come down as, shipment demand lowers. And they'll always have contracts. They're not going out of business or anything. I'm I'm not bearish on them as a company like they're going to fail. I'm just bearish on, the demand cycle for them. I think the demand cycle is going to be short-lived, and then when it falls off, it's going to fall off hard. So these prices, there's probably some money to be made to the upside. Maybe even back to like 325 in the next quarter or two. But after that, I think you're going to see a sharp decline in price. So if I was looking into it for a buy and hold, I'd probably wait and get it cheaper in a couple quarters. If I'm looking to trade it, I'd probably be getting it about now. I believe the last time you spoke to me about them, they were trading up around here, and I said they were probably going to drop, and they have. So now you have a good entry opportunity on the low end. That's me though. I don't evaluate the stocks the same way a lot of other people do, right? Like a lot of people are like, "Oh, this is pretty cheap. I'll get in here and I'll hold it for 10 years." And that's fine. And I generally don't enter anything with that plan. Yeah, they're going to get fucked on fuel expenses going into the summer. Again, something that will be realized in quarter 3, quarter 4. And the beauty of crashes and depressed economies in a capital market is that it spurs innovation, right? It makes it forces these big companies to go out and do new things, do things better, right? Because they need to recreate that demand for their product, for their service, whatever it may be. And by spurring innovation, not only do you see smaller companies start to move up into that space left open for them now that the valuation of these larger companies has fallen off, but you see companies that are kind of stagnant, kind of in a position where there's no further innovation for their product or what they do. Just not that they fall off, but they don't perform as well. Yeah, there is a public bathroom pretty close, if I remember correctly. I haven't been there in a long time, but that's because it takes longer for the real estate markets to correct. Price realization takes a long time. So I think we'll see drops in housing prices, commercial rental prices, and rental prices. But it's going to take a little while. Low volume, illiquid options. Great store with bullish forward guidance. Thoughts on this company in the future? Top 2 grocery store in the country, in my opinion. I forget who they own. I don't know if they're top 2. And Kroger's definitely first. Walmart and Target are up there too. Um, they look good. They look like they're a little earlier in the growth cycle than some of the other grocery stores. So while you might think they're one of the top 2, the market doesn't agree. Given how far behind they're lagging on the growth cycle, but they do look good. I would say they're probably going to go up. I think I looked into them a little bit before, and I liked Sprouts a little better in terms of grocery store chains that hadn't really hit their stride as far as valuation goes right now. I think Sprouts was a little better positioned than them, if I remember correctly. I have the analysis written down somewhere on a sheet of paper. I have like fucking 5,000 sheets of paper here. God, I need to organize this shit. Anyway. Yeah, you got it, Statchel. Ice the trees. Thank you so much for becoming a Dillionaire. I appreciate it.
Happy birthday, Gert. Yeah.
Thanks for your time. Tell me not to YOLO, degen, start position small, cut losses, and most importantly, you're hairless like baby. Thanks. Thank you so much. Rental prices are like stocks, only go up. No, that's not true. When housing prices decline, rental prices also go down. Because people are then put in a position where they can buy a house or rent, and the demand for rentals drops as people move into real property. And so, then the realization from the drop in housing prices is felt in rental markets. There are markets where the price only goes up, stagnates, or goes up. But that's not true for every rental market in the US. That's true in places like SF or NYC. And even those are low, lower than they have been in the past. Pre-pandemic, New York City rents were, like 50.5% to like 2% higher than they are now. And at the peak of the pandemic, they were quite low for people who entered leases at that time. And because there's still a lot of housing availability since so many people left the city, it's really been hard for those rent prices to recover. And with more and more work from home, it'll be even harder. Like an overstock type of grocery, great for lower income folks. Yeah, it's every time there's the idea of a depressed economy, I want to buy Aldi, and you just can't. It sucks. Oh no, shadow banned? No, you're fine, Brandan. Maybe I can move more out of the dumpster scene into the Wendy's men's bathroom. I mean, I didn't know I needed to read that. That doesn't mean you're shadow banned. You didn't even tag me. FISV popped up as insiders buying. Didn't look bad. I mean, I think I know what I have for Pickle's picks this week, especially with like a bounce coming. Fishery, the fuck that these a data processing service. It says weird demand cycles. Yeah, I mean, it looks good for a move back up, but it's not significant. Like $8, maybe. Seems volatile as shit. Kind of hard to predict. What's their shares? 600 million? Shouldn't be moving so much. Jesus. That's weird. Huh. Sprouts is like Whole Foods? Yeah, but cheap. With the COVID crash, it actually went up. Yeah, I mean, it depends where you live, right? Every real estate market's going to react differently. All right, I think that's enough for today, right? Yeah, we've covered everything we're going to cover. Pickle's picks will be out tonight. For those of you that are interested, I'll be recording or I'll be trying to finish recording. I already started this morning. The cover call video for the School of Stock channel. I know a lot of people have been waiting on that, and I want to get it just done with so people stop fucking asking me about it, honestly. Not that I care if it comes out, but sure. But yeah, I'm gonna get started on that and try to finish that up today. Pickles Picks will be out tonight. Check them in the morning, especially for updates before market opens if anything changes in my expectations. Make sure that you check the daily DD in the morning, because as we get options OI in the morning, projections can change. That's about it. Thank you guys so much for your support and tuning in. I appreciate it. And I will see you bright and early tomorrow morning. Have a good weekend, guys. See you later.